Where are you going to be on March the 20th in just 5 days from now? Wednesday, upcoming FOMC report, the Fed report, probably the most important Fed report. How many times do I keep saying that? I say it a lot for different reasons each time. Why it's the most important FOMC in the history of the world ever this time is because this Wednesday is critical because the market has priced in a rate cut. Even though now we're starting to pull back and thinking, maybe it won't come, we have been pricing in for the longest time a rate cut on Wednesday. Not for me. It's not coming. I know it's not coming. 100% it's not coming. I'm prepared to put my name in the sand. And for all of you to say to me, you were wrong. That's okay. I can live with it. I believe on Wednesday, when we cover the report, we'll cover it live on the show. You don't want to miss it. We're going to see some massive amounts of volatility because that we're not going to get a rate cut. Kind of already know that, but some people don't think so. Anyway, we're going to get a rate cut in the summer, but now there's a debate whether we'll even get a rate cut in the summer. You can see my buying power, $97,000. $97,000 is how much money I have got and willing to spend on the S&P if it goes down between 10 and 20%. At 10%, I would start to go in 20, 30,000, and then it would start to increase. Why am I doing that? Well, on FOMC report day, we're going to get volatility because we're not going to get a rate cut. And even if we get a pause, it's what Jerome Powell says to the press afterwards in the Q&A at the end about where we go next. And whatever he says, we will get volatility before he speaks, after he speaks. There'll be dramatic swings, people preparing their next moves. This is what I am going to do. I've already planned my moves 5 moves ahead. Remember, play chess, not checkers. I am prepared to spend my $90,000 on the S&P if it drops 10%. If it goes 20%, I'll put the whole lot in. Why? Because the S&P is the most reliable asset we have right now in stability, in unstable times, wars and everything else, potential rate hikes, rate cuts, God knows what else, inflation, all the rest of it. But why I'm more bullish and more interested in this report and the S&P movement is because the S&P has always been quite tech heavy. As we know, it has Nvidia at the top, it has Apple and Microsoft and all these things. And that's been quite successful over its history. However, I believe strongly that that is actually going to be a bigger part of the S&P going forward. I don't mean bigger as in they're going to increase the percentages of those holdings, but I do believe those are the stocks that, even though they're overbought, and they are the stocks that have the maximum potential growth going forward. Now, you might say, well, that doesn't make any sense. Why would you not look for the smaller caps, the mid caps? And you're right, potentially there's more growth in those. However, with interest rates remaining high, or if it doesn't come down, they will struggle. Everything that's borrowing money right now is struggling. Virgin Galactic, Nikola, Fisker, all of these companies are struggling because of really high interest rates. So I want a stable asset. I want an index that includes J&J, Coca-Cola, Pepsi, Coke, and all these things with good defensive positions. But I also want the leaders in AI, Nvidia, Apple, Microsoft, Google. But I don't want those individually, because individually they're massively overbought, particularly Nvidia. Not so much Google, that's a good value, but the rest is overbought. So if I buy those individually, I've got some issues. However, if I own the S&P right now, and it is heavy tech weighted with AI particularly, I think we've got massive potential here. Now, even if we get a drop on the S&P, and I hope we do, I actually love red days. Green days don't mean anything. Green days, I just get more money. But on paper, I don't get anything until I retire. What's important is buying lower and lower and lower on an increasing economy. That's what I want. So I want the market to sell off so I can buy more. So I'm prepared for the FOMC report. I think AI is the future. It's a problem solver. You often hear Kathy Wood talk about that, a problem solver. It doesn't just solve problems, it makes the economy and businesses more efficient, hence more profitable. Not necessarily so great for the employees, perhaps, but great for the investor. Remember, own the casino, don't play the casino, and you're going to win. Own the businesses, don't spend. Let everybody else spend at the businesses. You own the business, all right? That's the way I see it. Don't be that guy walking around the mall who's unemployed, got no money, and he's got all the latest gadgets and the latest stuff that he's got on his credit card. Be the guy walking around in an unknown shirt like this one. I bought on Amazon, just as good as a name brand, but I bought it for like $20 because it looks just as good, but it hasn't got a name on it. I own the businesses where you shop. Be that person. No, don't be that person. Go out and buy all the stuff from all the shops I own. That's what I should say. Anyway, so I'm hoping it does go down and I'm ready to buy more. The FOMC report is going to be very interesting this year, this time round. So join me for that. I think it's going to be great. Click above my head for all the links down below, for all the links, including our extra channel. You don't want to miss it. Down here, we got our extra channel and the music channel. You don't want to miss those extra events that we do over there. And also over here for the event. I'll put the event here and you can join us live for the FOMC report. Time to make some money and turn the printing machine on. Maybe? Maybe not just yet. Till next time, as always, take care of yourselves and each other.